What's up guys, I hope you're all doing well. Today I am going to do a review of the global house prices, across the world. If you watch my other videos, I do a monthly update on the UK property market, check those videos out. But today I want to expand it further. I plan on buying abroad at some point. So we're going to look at the top 5 countries globally. We're going to focus on those. We're going to look at the average house prices in these countries and the average growth across these countries. So let's start by looking at some headline figures. For the first quarter of 2021, the first quarter being January to March, just those 3 months. House prices globally, and when I say globally, it's across 56 different countries, these being 56 of the major economies across the world. The growth in the price of a house across those 56 major countries has been 7.3%. That is insane, guys. And to put that into context, from January to June, the 6 months of the year so far in the UK, the growth over those 6 months in the UK property market has been 5.4%, which, by the way, guys, is very healthy. We're seeing demand and growth in the UK property market that we haven't seen in a few decades. However, when you compare that to the global housing market, there's been more growth in 3 months than there has been in the UK in 6 months.
Jesus Christ.
This is huge, insane growth globally, guys. In fact, guys, according to this report, this is the highest rate of growth in the global housing market that we've seen since 2006. So this is a 15-year high. And we can see that from this graph right here. Let's zoom in a bit more. This purple line that you're seeing here is a rate of growth in each quarter since 2005. So I want to draw your attention to 4 key things. First of all, let's start at 2005. We were at a peak of around 12%. Fast forward to 2009 during the global economic crash that was driven by the subprime mortgage crisis in the banking sector. We go down into negative growth. Then from 2009 to 2020, the average growth, we can see that it oscillates up and down, but the average growth is round about 4 or 5%, right? And then what we're seeing here is a curve going upwards towards the 7.3% where we're currently at. So this 7.3% right here, this hasn't been achieved since all the way back in 2006. And as you can see, this line is trending upwards, indicating that we're in for some further growth. Of course, that's no guarantee. We don't know what's going to happen tomorrow. There could be COVID part 2, God forbid.
Jesus Christ.
But it's indicating that we're on some kind of upward trajectory for the global housing market. So guys, what's driving this? Well, let's look at what the Financial Times had to say. There's a really interesting article. What they're saying here is, firstly, that savings have accumulated during lockdowns. Now, a lot of us have been stuck indoors. We haven't been traveling. You know, we've saved a lot of money on the standard travel into work, so trains, cars, etc., because we've been working from home. We haven't been able to really go out and socialize, entertain ourselves, go out on holiday. All of those things means that a lot of people have saved a lot of money. And what the Financial Times is saying is that perhaps to the extent that more people globally have accumulated enough savings to spend on a house, which is very interesting. I don't know about you guys, but I certainly haven't saved enough for a house. But then again, it might be people who are already saving, and the extra kind of boost that people have gotten in their savings during lockdown potentially means that a lot of people have been able to bring their house purchases forwards. That's one theory. Let me know what you guys think in the comment section below. What we've also seen, guys, from an economic standpoint is historically low interest rates. A lot of central banks around the world, including ours, have lowered the base rate as part of their monetary policies. And in short, the purpose of lowering the base rate is really to stimulate the economy. If you make lending and borrowing cheaper for people, the idea is that people are going to spend more and stimulate the economy. Globally, many countries, including ours again, have fallen into recessions, and governments really do need to stimulate spending. And that, of course, has an effect on the housing market, because when you're looking to get a mortgage, you really want to get a mortgage with the lowest interest rate possible. If the central bank interest rates are low, the likelihood is that lenders are also going to lower their mortgage rates, which means more people taking out mortgages and buying homes. And thus the prices of homes increases due to the increased demand as a result of cheaper borrowing. And then thirdly, guys, is that search for space. I've got a lot of friends who have moved into bigger homes during the lockdown periods. A lot of people during the last 18 months have said to themselves, I want to move out of the city or the town I'm in that's quite high population density. I want to move to somewhere that's less crowded with more space. And on top of that, working from home, we want to be in a house with more space. And that seems to be a trend that's not just been prevalent in the UK, but globally. A lot of people are upping and leaving to find properties that are more spacious, which means a higher demand for properties properties and thus prices going up. So those are three key factors that are driving the rise in property prices across the world, guys. And the thing about this pandemic is that everybody is experiencing the same thing. And from a property perspective, people across the world are reacting to it in much the same way. Us as human beings, we're all very similar. The pandemic has directly shaped our housing wants and needs on a global scale, guys, which is very interesting. So let's have a look at the data and go down to the country level. This table here, guys, is very interesting. As we said at the beginning, it's the 56 major economies across the world. And what we see in this table is the growth over 12 months, 6 months, and 3 months. Let's focus on the 12-month growth across the top 5 countries globally. So what we can see here, Turkey in first place, 32% rise in prices over the last 12 months. So for example, if you'd have bought a £400,000 property in Turkey this time last August, right now it'll be worth £528,000. That's insane, guys. New Zealand, 22% rise, so it'll be worth £488,000. Luxembourg, 16.6%, so it'll be worth £464,000. Slovakia 15.5%, so it'll be worth £462,000. And the good old US of A, 13.2%, so it'll be worth £453,000. These are huge rises, guys. For context, UK is not done too bad at all as well, in 12th place at 10.2%. So you would have benefited from a really nice equity rise if you'd have bought 12 months ago, 5 months into the pandemic. And just to put these numbers into context, guys, over the last 10 years, the UK property market has grown by an average of 5% per year. So clearly, growth in the UK and globally is above average for those 3 reasons that we touched on earlier. Now, if we look towards the bottom of the table, we can see that out of those 56, only 4 countries, only 4 out of 56 experience negative growth, which reinforces the point, guys, that globally the property market is in a very healthy state right now. Now, what I thought would be fun to do before I end this video is to compare how much a property, the average property, would cost in these top 5 countries compared to the UK. So the best way for me to do this is to compare property in each country on an average price per square meter basis. So in the UK, on average, property costs £3,794 per square meter. You can see that right here. The best performing country over the last 12 months has been Turkey. Let's compare Turkey to the UK. So a property in Turkey costs £622 per square meter. The average property in Turkey is 6 times cheaper than that in the UK, and it's grown roughly 3 times as much in the last 12 months. Next, let's look at New Zealand. The average property in New Zealand is £3,589 per square meter compared to £3,794. So roughly around the same price as a property in the UK, but it's grown twice as much. Next up is Luxembourg, guys. The average property in Luxembourg, oh my gosh, is £7,561. So basically double the price of a property in the UK. Next was Slovakia. The average price of a property in Slovakia is £1,633 per square meter compared to £3,794. So a little over half the price of property in the UK, and that's grown at 15.5% compared to 10%. And then lastly, let's look at the United States of America. The average price of a property per square meter in the USA is £2,026 compared to £3,794. So very similar to Slovakia, a little under half the price of property in the UK. So this was just a fun comparison, guys, but very interesting for me to see that a property in Turkey on average is 6 times cheaper than the UK, but has grown over 3 times as much over the last 12 months. Now, obviously, you know, these are very unique economic conditions, very unique property market conditions. 32% growth in a year is very, very rare. We probably won't see this again for a good few decades, guys. But it's good to know and get an idea of the sorts of prices of property globally and their growth rates. I hope you found this video interesting, guys. If you did, leave a like, share it. Don't forget to subscribe, and I will see you guys soon.